Uh,
Hi, Gordon, we're live.
okay, thanks. Good evening, everybody, or whatever time it is for you around the world. In 60 minutes, the US market is about to go live. And between now and then, I'm going to tell you what stock I think might be a good idea to try and trade. There's a lot going on right now, and I think the way the market's set up right now it is telling us that institutional investors want to be buyers. Even at these all-time high prices, they still want to be buyers. Really interesting, but I think I can give you some ideas of why. In order to do that, I'm going to share my screen and walk you through the process that I take in trying to find a good trade every time. So here we go. Hopefully you can see my screen now. If you wouldn't mind chatting in, let me know whether or not that's okay. Great. So what we're looking at is crude oil. And in particular, I'm going to pay attention to this Midnight Trader Newswire's news item that says oil tumbles to 3-week low as virus spread menaces outlook. Oil plunged to a 3-week low, etc. Futures fell. Okay, so that's oil, right? Basically, coronavirus coming back. Oh no, people won't buy energy, and so that's what has happened just in the last few hours. There's a 5-minute chart of crude light crude oil futures. Right now, let's have a look at the Nasdaq and see how that's responding by comparison. So the Nasdaq dropped off a cliff just like oil did, but since that time, yesterday, it's been doing this. In fact, it's above where it closed on Friday as of right now. So this is people selling off. And by the way, this is futures, right? Morning, Gordon, cooking my dinner. Okay, yes, it is morning for me. That's what she's referring to. So yeah, I mean, really, Nasdaq hitting all-time highs and exceeding all-time highs after all that bad news. Well, it's as though people don't believe the coronavirus narrative. Why would that be? Well, let me just run over to these charts right here. This is coronavirus or corona.help, and it's kind of the aggregator site that early on captured a lot of attention, and so they've been keeping track of the charts all the way along. So this is the infection history, total confirmed cases, right? As you can see, this little curve right here seems to imply that we're heading up, right? Well, let's look at the countries individually. So a lot of people are saying China, stuff going on in Asia and China is new cases in China has got people concerned that, oh, this could be real. Now, wait a second. China? I thought they stopped having cases after 87,000. So you got to see this. The China data, it's like I don't think that the market has ever really taken the China data seriously. That being said, I got to show you this chart. There it is. Active cases, right? So active cases early in this early in the pandemic, February 2020, spiked and then dropped because China got it under control. And then there's been a few bumps along the way. But now, just here in the past, over the weekend, what do we got? Active cases jumping. What? Just spiking all of a sudden like that? So I think this is what people are reacting to when they're saying, oh, coronavirus could be serious, right? So the news headlines come out coronavirus is a problem, oil's dumping, and so the stocks go down with it. But within hours, that gets reversed on the NASDAQ, not on oil, but on the NASDAQ, right? So to me, this is saying that NASDAQ stock buyers aren't really taking the coronavirus headline seriously. Why would that be? Well, let me go back up and check a different country. Okay, so the largest number of cases from any country, sorry, I gotta back it up here, is the United States, right? And on this chart, it's interesting because, or on this website, it's interesting because India is actually approaching numbers of the United States, which that has not been the case for quite a while. So that's interesting. So are cases, in the United States taking off? That little blip might make it. That's basically the Delta variant is what that is. But what do new cases look like in the U.S.? Well, we see that little bit going on. We do see this bit of active case, starting to come up. So maybe, but if that were serious, then you would expect people should really pay attention to it. It's not the U.S. cases that are hitting the headline news anyway. It's China and Asia in general, Asian countries in general. All right, well then let's try a different one. How about India? India's number 2, and it's an Asian country, so maybe there's spiking new cases in India. We get down here, and the daily change. Okay, that was back in May, and where are we now? No new spike, and no new spike in active cases in India. So I feel like between India and the U.S., the NASDAQ is responding to, yeah, we feel like if there are new cases in China and Asian countries, Taiwan, Korea, South Korea, whatever, Japan, they're going to handle it. They're just going to handle it. And as far as stuff happening here, don't think it's going to slow down. That is what the NASDAQ chart is trying to say. I'm not trying to say that's the way people actually feel. It appears to imply that people are, a little worried. No, not really. Get over it. Okay. Why would they do that? Well, here's the other thing to point out. These are NASDAQ futures. Futures, okay? It's not retail mom and pop, investors from 401ks. It's not stuff like that. It is institutional traders. I mean, yeah, there's a few guys that got a couple $100,000 account and they're trading futures overnight and stuff. But they're not doing that. They're not making it move up higher and higher like that. So this is institutional grade trading for the most part. Now, it might be that they know what's coming in to their own funds, and lots new inflow from paycheck, 401k disbursements, and just people automatically saving their money at the beginning of the month. They might know that that's coming, so they are thinking, great, we'll get in ahead of it because we know money's got to go somewhere. It could be that, but the bottom line is they're not afraid of the markets dropping down. They're afraid of the markets running higher, and they're going to miss it. So why do I open with this? Well, because this is this huge disparity between the news, commodities, and stocks. People still want to buy stocks. That's what this chart is telling us. So how are we going to go find what those opportunities are? Well, I'm going to take you now to one of my favorite sites for looking at pre-market data, and that's going to be Market go to the pre-market screener. Where's the pre-market action? Oh, sorry, it's in stocks. Pre-market trading, and bring up to you where we see this. As you can see, we've got some stuff going on. The largest market cap stocks, I like to sort these by market cap so I can see, what's really happening, which stocks are moving with that have high market cap. And it's Tesla right at the top. But that's not the hugest surprise because Tesla's a big company, right? But there's an SPY, QQQ, of course you would expect that. Here's the next one down. AMD is the most, these are most active, not necessarily going up. This is, advanced micro devices, that's chips, right? What's going on here? We got a volume of 311K. That's pretty good still with, 45 minutes left before the market opens. Over here, I'm noticing Coinbase. The volume's only 76K, so that's not really heavy, but it's up 3.3%. So Coinbase is coming up on its earnings, and AMD is also being actively traded. There's a relationship here, in case you don't know. AMD makes chips, CPUs, but they also make graphic chips, right? Coinbase is, of course, an exchange for cryptocurrencies, probably, one of the biggest, if not the biggest. I think they're the largest publicly traded company, because they just went IPO 2 or 3 months ago. So the fact that both of these are going on right here makes me think that there's news or some sense of increased demand out there for cryptocurrency mining. And so let's quickly look at the Bitcoin chart here and see what's happening. Yep, Bitcoin, like the NASDAQ, is also heading up. Interesting, similar time frames, right? So we got cryptocurrencies heading higher, and that despite the U.S. Senate vote in favor of amendment that threatens the crypto industry. Okay, we would think that should be crashing down. It's not. It's up a good bit. So that tells me that the crypto trades might be an interesting play. And I know that Coinbase is coming up on its earnings. Let's go coin, and we'll go daily chart now. Step back a bit. So this is coin since its IPO. See, the thing about an IPO is let me get rid of that comparison there. You get this sell-off a lot of times. That's not terribly surprising. What you are watching for is after the sell-off of the IPO, and especially a tech company that's very visible and people really, and Facebook did this, right? Facebook opened it 45 years ago, dropped down to 22, hit kind of a base. If you bought Facebook at 22, it's 10x by now. So coin has bottomed out a little bit here. Could it be this is the time to jump in? I mean, that was quick if that's all it was, but the drop is significant, right? 360 that it got up to, well, actually 400, and now it's down around 220-ish. It's actually right now up around 250, 260. So this thing moves a lot. I'm not, when I bring you these ideas, I'm not talking about buy this and hold it for 4 years so you can get 10x. Somebody else will give you that information. Full disclaimer, this is not a trade recommendation for your specific situation. You got to do your own due diligence. I give you educational ideas. I'm not a licensed registered investment advisor. Trade at your own risk. There you go. What we're looking at here, though, is, I think, a possibility for a good trade. Why? Well, because I think you can put your stop loss clear down here. It's a long ways. but this thing moves. It moves a bunch, right? So if you put your stop loss at 210 and then you buy at 250, 260, somewhere in there, that's, you know, a $50 difference. Then you take a $25 profit if you get it. You're only having to get to right here, 275. And under normal circumstances, I would say do that, because that looks like an easy hit over the next week. However, what we've got is earnings coming up. So earnings didn't go well for Coinbase last time, but they were expected to hit 305, and they hit 145. Is that what that says? No, 305. But standardized were 145. Yeah, new company, EBIT, EBITDA, all that stuff, GAAP, whatever. It's just they were barely off, and yet people sold hard. They sold hard, and then they held. That's the key thing. They've been holding ever since. What are they expected to do now? The estimate is 229. Pay attention to that. The estimate was 305. Now the estimate is 229. So they're, significantly lower revenues expected to be coming in from them. But think about what's happened in the crypto space over the past 2 or 3 months. Do you feel like people are spending less money buying crypto just over the past 3 months than less money or more money? What do you think is happening? I don't know, but I think people are spending more money on crypto now than they were 3 months ago. Could be wrong. But I feel like the transactions and the participation have jumped, and they are still, people are still looking to buy crypto, and Coinbase is, the biggest player where that happens. So I kind of like this trade, but it's not my idea because earnings, right? So post earnings later this week, I think there's an opportunity there. All right, let's go back over and look at the pre-market trading. Robinhood is up. That's still very close to the IPO. Yeah, and then we got earnings coming up. I don't know. That's not my style. Just way too much risk here. I feel like just wait until you see that base play out, and then start talking about it. That's DraftKings, AMC, DraftKings also over here, so that's looking pretty good. ZS, they're coming up on earnings. See, DraftKings is past earnings though, so let's have a look at DraftKings. Yeah, I like this. I like the look of this. This is a stock that was estimated to lose 54 cents a share, ended up losing 76 cents a share, and opened that much higher. I don't know why people want to buy this, but they want to buy this. It dropped down all the way here, closed the gap, and then filled back up. Now it's up again. Pre-market activity, we got DKNG trading, according to that quote a few minutes ago, at 53.70. 53.70 is going to be up in this area. So it's already jumping to new highs. This is my trade idea. You might think, Gordon, why are you buying brand new highs? Well, because there's a reason that people go after stuff. And the idea is if something starts high, there's actually more chance for it to go higher than something that starts low. Something that drops low, there's a reason it's down there. Somebody's selling it, and there's more chances for it to go low. That's just statistically been my observations over time. So this is it. Now, today I walked you through that process, my thought process, how I'm looking through everything, how I'm finding the trade idea, and so forth. Usually I'm going to come here and just say, boom, this is it. But I wanted you to see it kind of in real time, how it is that it unfolds and plays out. I got my other screener that I use on FinViz. I'm going to run over there. DraftKings probably won't show up here because this doesn't have the pre-market stuff going on. And pre-market's kind of a big deal. But for those of you who don't know, let's see. Yeah. For those of you who don't know, I have real preference for working with, oh, I'm not logged in, gap and tall range screens. So I like looking for opportunities from those, and I've got screeners here on FinViz that I use. So we're going to look for, let's look for gap first. It tends to be a little bit stronger. So Pubmatic, that's actually not a bad look. And CFLT, Confluent, that's an IPO also that has a bit better look to it. So I don't, let me look at the tall range. Wow, Albertsons grocery store. That is amazing. See how quickly that's jumping? See, I would love to have got that, a couple of weeks ago when it was just crossing 21. I mean, of course, in hindsight. ATVI, they've got earnings coming up the next 2 or 3 days, but I do like that look. It's not a gap. It's fairly tall range. This isn't an idea, but I want to keep an eye on this one. Probably a post-earnings play. Foods. So interesting. Oh, here, Ball Corporation, packaging and containers. So if food companies are jumping, and Ball, this is like, those bottles that people can food with, preppers, maybe, I don't know. That looks pretty good though. That looks like a tradable idea to me. And then of course here's CFLT we looked at with an IPO. So I'm going to go look at the charts to see if I can give you another idea besides DKNG. But before we move on from it, I want to set that out and show you, okay, if this is the idea, do I think this idea is better than the other ones? Yeah, because pre-market is a stronger indicator than, over the weekends, gap and tall range, although those are still good. So this is the one I want to work on first with you. And I'm going to just give you this idea. If in fact you were to consider getting in, let's say 53.50, okay? That's, let's say that's the place we managed to get in. We just put in a limit order or something. 53.50. And then where do you put the stop? The answer is you put it down here underneath recent support. Now you could just go underneath the gap, but because that was earnings, a lot of volatility, and real, I don't know. Yeah, I'm going to do this. I'm going to make this tighter. A much more conservative play might be to put it way back, put the stop loss way back, and so that you have just a lot of room to let the price wiggle around, right? If you bring it in tight like this, then you are stating your belief, hey, buyers jumped in and they're going to move up from here. Well, because this is earnings and because we gapped up, even though the news was kind of bad, but people are like, well, yeah, but forward. And here's the other thing, DraftKings, this is like fantasy football and stuff. Football season's coming. It's right around the corner. And this right now is the time where people really get going on fantasy football and placing bets, and the hype is super high before the season gets started. So I think that's part of what's playing into it, is people are saying, yeah, the whole fantasy football crowd, they're gonna really get going. Well, I'm not a big fan of trying to hold something for a long period of time, but I am a big fan of this setup where you risk 2 to make 1. So we get in at 53.50 and we set a stop loss somewhere around $50. That's 350. Then $1.75 higher is my target. So add 75 to that. That's 54.25, 55.25. And that's about right there. So 55.25 would be the place. And so I will go ahead and set that paper trade up. And just show you the way I would approach this. I'm going to look for both a profit, take profit and stop loss order. I'm going to look for 350 below. I'm going to look for $1.75 above. It says pips, but in this case, it's pennies, right? So, oops. All right, now let's make sure I've got this appropriate. So the forward trade from last week, still floundering, but I actually like it. I think I want to hold that. I like these things to finish in a week, but that one might take 2 weeks. What happened was that General Motors reported and dropped down. And amazingly, both General Motors and Ford, after the drop, held and then kind of inching back up. So I still like the chances there. We'll see. Microsoft just keeps chugging away. This is a trending trade that, I just keep moving the stop loss up. Stop loss is up to 271, even though the fill price is 278. The last price 289. I'll be looking to move that up later this week. And so anyway, this one here, I'm going to put it in with a limit price of 53.50. Hopefully it'll fluctuate and come down and get me. We're looking at 53.15 by 53.78. So I'm kind of in the middle of that. Yeah, but I don't want to jump up and get the top end price because I don't feel like I have to. I think this thing's going to move all over the place, and 53.50 is even being a little generous. I could probably get a lower price, but I also don't want to miss it. So I'm gonna put it up there closer to the upper side rather than the lower. Okay, that's actually tightened in. 53.36 came up from lower. So all right, then the units, I'm going to risk 1% of this $225,000 paper trading account. See, I started that with 100 about a year ago, and little by little, well, more than a year and a half, and little by little, we've been moving up. So it's paper, but that just tells you stuff like this has made a big difference over time. I think that's everything, right? So if I did this, then I'd be looking to try to grab $1,100, and I'm risking $2,200. That's the risk to make one strategy. I want to get this trade. I want to make profit at it, be done, move on. I'm going to round that off to 650. So, okay. There we go. That's the limit order. When the market opens, we'll see whether or not we get it. That's still 30 minutes away. Plenty of time for us to talk about the other 2 trades we came up with here. CFLT, definitely want to look at that, and Ball Corporation. We're going to start with BLL. Now, I don't know, packaging? I'm scratching my head over this because there's like a defense contractor and then there's a packaging company. So I didn't think that they were the same one. No, this one's got to be the model maker, I guess. Yeah, so just going back, let's check out their earnings. Well, actually, let's go back a little farther. This is how COVID affected this company. It dropped off instantly, but it came back like a lot of things did What's interesting is that by August, it was already back at new highs. Why is that? Well, the answer is if this is the packaging company, the bottling company, this is preppers, the people who are buying things and putting away food storage and that sort of stuff. If I add SWBI, Smith and Wesson, I wonder if this will be similar at all. Smith and Wesson actually got to a new high earlier in June. That's not a very similar. So Smith and Wesson's, awesome run, right? We had not too long ago this moment where in one of these sessions I called out Smith and Wesson because of its pre-market activity, and that's what it did. It came back to earth, and now it's kind of sitting around here. It's probably worth a look for another trade opportunity, but I was just curious to see whether or not this had the same pattern. It does not. And why is that important? Well, because even if this company is, riding the wave of preppers, it's a different wave. So Smith and Wesson's already kind of run its wave and been done with. This one might be making something brand new. I think, yeah. So the estimate was 83, but the report was 86. The surprise was only 3 cents a share. And yet people went for this. News look, Ball's comparable earnings sales grow. Ball board increases quarterly dividend. Oh, okay. So dividends coming up. That's going to be 20 cents, and where it was 15 cents. That seems like a lot. That seems like a big move. 81 to 85. It's like a 4 or 5% increase. And the dividend is moving from 60 cents, like 0.75% yield, to 1% yield. This is a 4% move just to get a 1/4%. This does not move the this does not justify, or sorry, this news on dividends does not justify that kind of a move, unless people are just in love with dividends, right? It's like bigger than what the dividend would account for. Clear back in July, insider at Ball acquires stock via conversion of option to dividend sales. So, all right, this is fun. I'm just going to take a second on this. July 19th. Some people feel like, oh, insiders, that's the thing. July 19th. Yeah, this is fun. So an insider exercises options and buys a lot of stock. And what happens after they do? I don't know. It might be that the insider bought it a bunch and then sold it all, because the reason that they exercised their options was because they needed cash for something. Wanted to buy a new house, were getting a divorce, paying off an old house. I mean, who knows, right? They crashed their Lamborghini. I don't know. But it might be that they exercised and then they sold them off. Now they're done selling, and who knows what it is. My point is insider trading is really not as good an indicator as most people would crack it up to be. It's actually a very bad indicator of the timing of when it's good to buy stocks. That being said, we came down, we hit support. We came down again, we hit support. Earnings happened. People, it's jumped up because the news is mildly good. And so you got to believe this company thinks its prospects are good going forward. And there's something else here going on. It's late August. It's about harvest time for a lot of home growers, or in the U.S. So it could be that people are like, well, a bunch of bottles are going to need to be purchased, and I kind of think that's what's going on, is that people are thinking home canning is going to be big this fourth quarter. And so that it might be that. But whatever it is, I feel like you got good support here. We've closed up this gap, and that means we could have fairly open area. So a trade idea for this one, risk 2 to make 1, is wherever it opens, you know, somewhere in that region. Let's call that 85, 35. I think we can bargain shop that at least a little. Let's just say anything below 85 we're interested in. And target and the stop. We'll put the stop underneath the gap. We could come clear all the way to here. I don't think we'll have to. I think we can just go from the gap right there. So if that's our stop, and that is our target, we'll just change the color of that so we understand it's not a target or a stop. Then I think this is a pretty good setup. So what do we got? 80, buying at 85, stopping at 80.50, and then we could take 250 higher. So 85 even. Yeah, 250 higher is going to be 87.50. I can actually bring this down to 87.50-ish. There we go. All right. So now, why do I set up risk 2 to make 1? Well, because I like to have a better than 65% chance of winning every time. That setup gives me that. If I'm really good at buying stocks, I should be able to win this about 70% of the time. And that's what I tend to do, is that these trades, because they're you know, after earnings, they're gaps, they're made of trends that could continue. I tend to get just a little bit of an edge, and that's all I need. Just a 4% edge if I can get it, 3 to 5% anywhere in there, but 4% is obviously what I'm targeting. So if I can make these risk 2 to make 1 trades and be right 70% of the time, that is all sorts of things. It's fun. I like to win, right? Better than winning, I like to make money though. So what I also get when I win 70% of the time, statistically, I'm more prone to create winning streaks. And when you get winning streaks, you're you're better able to increase your position size little by little. In these sessions, I don't go through that, but when you take a class, there's a class coming up in September. That's the next time the schedule. So if you take a class, I walk you through that. How do you increase your size as the winning streak goes on so that statistically you have an advantage. And that can make a big difference. Same trade, same position size, same risk, and yet your returns are higher just because you follow this increase of risk in a winning streak. If you have the ability to win 70% of the time, which I do. So that's what that's all about. All right. So the next idea was the CFLT, Confluent. I don't know anything about that company, and it has recently gone IPO. Because I got a few minutes here before the market opens, I kind of want to find out something about this company. It says software infrastructure. I don't know what other companies are in that group. Well, okay, Adobe, Akamai, Bandwidth, Couchbase. So really could be anything. So let's find out a little more specifically about what this company is and what it does. I know that looking at fundamentals really doesn't mean much. I mean, doesn't mean anything better than technicals. Wow, I'm having all sorts of light troubles this morning here. What exactly is going on? I do not know. But so Confluent, your Apache Kafka journey begins here. So it looks like these guys are cloud based or server software. Ultimate cloud native, Apache experience. I mean, Apache, that's web servers. And let's go to, we have a About us or investor relations thing. See, that's going to be learned. Let's scroll down to the bottom here. There we go, investor relations. Let's see what they want to tell us. Creating the foundational platform for data in motion. With Confluent Organizations, Karnos, yeah, latest news. They're presenting at an upcoming investor conference. So did they already present? KeyBank Technology Leadership Forum, that's on Tuesday. And then they did their earnings call. So we could dig into that. And the press release for the earnings. This might just tell us, what lines of business they think are going to do well. Total revenue up 64% year over year. Cloud revenue of 20 million. So, cloud computing situation. Data within the modern business, constant flow, blah, blah, blah. Execution of our land and expand strategy drove accelerate top line growth. Confluent is the central nervous system that connects all application systems and data layers for companies succeeding in today's digital first world. Puke. I mean, doesn't that just sound like such, corporate? I mean, I worked for IBM for 10 years, and that just sounds so general, corporate. Make it sound good. BS. So, it's like, well, cloud computing, I want to invest. Okay, fine. Go. Bye. Yeah. Is pioneering a fundamentally new category of data infrastructure focused on data in motion. Confluent's cloud narrative offering is foundational. So data in motion, that's such a weird phrase to me. I mean, maybe I'm just so far out of technology, I don't know. But I'm assuming it's going to be like streaming data services. So, okay, fine. I don't see anything radically new here. That's kind of what I was looking for. Is this company something? It's cloud computing, maybe some real-time stuff, and good for them. They got people interested. They IPO'd, up they went. All the insiders who wanted to sell, or the people who owned pre-IPO, want to cash out. And then they got this, and they had earnings, and they like their future prospects. Okay, that's it. That's the story. It doesn't have to be any more complicated than that. Unless, of course, there was some radical new product line that they were part of, then everything else is just, it's business, and how are people responding? I don't know if that's done. That's enough of a support. It's kind of early. Usually it's several months out before it makes a big support. Thing is, if you get this big jump and then it finds a base really quick, all the selling is done, and then people start buying, then that's a really good sign, because it takes off and it never looks back. Google opened at 80, or they were going to try to open at 80. I think they opened at 120, and they just launched and kept going. And now they're thousands per share. But this company looks like it had some selling, and the selling isn't quite done. You got this whole bit right here going on. Still, I like the look. It's a gap trade. We're well above the 10-period moving average. That was that gap right there. But yeah, so I still like the look of it, and I think it's probably worth considering a trade setup. So I'm going to go ahead and bring that up. CFLT. How would I set up this trade? Okay, well, risk 2 to make 1. That's my MO. Now, there are other ways you can do this. If you like the idea of holding on to the trade and grabbing a big run, like hey, well, yeah, but Gordon, look, this could go hit a new high. It could go up to 60, right? That's a 50% gain. Yeah, it could. And if you want that trade, let me show you how you would do this. After the gap, after earnings, big move up, easy to think you can bargain shop this. Now, if you don't want to miss the trade, then you might want to be, what's the pre-market on this? Let's have a look. Where's it trading right now? 42 by 46. So the pre-market is really thin, but 46 is way up here and 42 way down there. So we're just going to split the difference. We're looking at 230, 44, 30, 44, 30. Well, that's about where it closed. So very possible you could bargain shop that. I kind of don't think so. I kind of don't think I want to try to bargain shop that. I think I want to get in close to the old close. So I'm going to put that trend line, I mean the entry price right there. We'll call it 44. Yeah, we'll just call it 44.40. Then where am I going to put the stop loss? At least below the low of that, maybe even the low below earnings. Most conservative would be, hey, come clear down here. I don't think we need to quite do that. I'm just going to go under this earnings day. It's actually so close to the day before. Yeah. Yeah. And the other thing is I'm at 44.40, 39.40. Let's just make it even, make the math simple. So my stop is $5 lower, right? And then if my stop is $5 lower, but I'm shooting for the moon up here, how am I going to do this? All right. Well, what I'm going to do is I'm going to try and take, oops, I didn't realize I had them both. I'm going to try to risk one to make two. It's the opposite of what I do. But I always set that stop first, and then I figure out, where's the profit target. If I were doing risk two to make one, that profit target would be somewhere right around in there. But instead, we're going the other way. $5 down, that means $10 up. So $10 up, 44, 54, right here. And see that kind of room, that looks like a long way away. It is, but and that means the trade's going to take longer. It's going to take 3 or 4 weeks potentially. But what I've also got is the ability here to say, if this thing goes up and starts getting up there, great. I can slowly, carefully move the stop up. Once the stop gets above break even, if the stop is above break even and I haven't hit my profit target, I can just take that profit target off and let it keep trending higher. That's what that Microsoft trade that you keep seeing week after week in my paper trade positions is doing. So yeah, if you think there's an opportunity for it to take off, then that's the way you would set up the trade. I'm not convinced that this, like I said, I just looked, it's not some revolutionary new product. It's not some, oh wow, this is going to capture the imagination of investors. It's a trade. So $5 there, 250 higher, 680, 46.80. All right, 44.40, 46, no, 46.90. Yeah, we'll just call it $47. All right, so that's my profit taking target. That's my stop loss. That's how I would set this trade up. And that's not a bad trade. It's not a bad trade. Of all the trades I looked at, though, I still think DraftKings is the interesting one. So that is what my idea for today is, with these two other background ideas. I'm going to put the DraftKings one in and leave it. I'm not going to put in these other two just because for educational purposes here, I want to keep the tracking real simple. All right. So we've got 10 minutes almost, or just over 10 minutes before the US markets open. Between now and then, what's stuff coming up in the current week? So we looked at, what's happening right now. What's coming up in the current week? Let's go back up and look at Market Chameleon and get some cool ideas. The answer is earnings calendars can tell us, well, let's see. Yeah, upcoming earnings analysis. Let's have a quick look at that. What do they got for us? Currently overvalued relative to fourth quarter historical average, currently undervalued. Okay, that's a fun little report, don't you think? It's like these are the ones that just look like they're lower. None of the stocks that we've looked at today are on this list. Is that who I think it is? LAZR. I think it is. Yep. Oh, no, it's not. It is not. LAZ is Lazard. Okay, I was thinking it was Lazard. I actually know guys that work at Lazard, that's why. NASDAQ, Luminar Technologies. Let's have a look. No, that's garbage. Yeah, so let me say this. When you see something that's undervalued, the reason it's undervalued is because the stock price has gone down. So this shouldn't be a surprise that we come off this, right? And so that's interesting. This huge jump, and then since then it's kind of been coming back down. Yeah, that's not too exciting to me. Implied move. So this one here is 32% undervalued. The options, this is what the so options are priced as though it could make an 11% move one way or another, and it's 7.3% undervalued. That's what we're saying. So the one we just looked at, LAZR, options are trading at 7.9% potential move, and it is 6.5% undervalued. So it's not that far undervalued, really. It's just like barely. And then the options are set up for an interesting move. So let's have a look at this one though. UPST. Implied move is a 14%, but it's 32% under. So that could be that could be really interesting, because it's like if it takes off, people are expecting it to take off a certain amount, but if it came back to its relative value, then let's just have a look and see how far down it's come. BST Upstart, right? Isn't that what we're looking at? Yeah, Upstart. Oh, all right. It's undervalued because last year it didn't have a quarter. It's still an IPO. That's too bad. That being said, this is interesting looking to me. So we've got 14% move, and we've got earnings coming up. Earnings estimate at 25. What was estimated before? 15 and 1. In both cases, they beat those last two estimates. And notice the estimates keep getting higher just over the last two. So this actually is a company that appears to be having some success, and customer or investors are recognizing that. So you get this huge run up, another run up, right, after earnings. And it's priced for a 14% move higher, but a 14% move on this is going to be like $15, $16. That's just going to take it right back to the old highs there, 160. If it were to break new highs, we can see this thing go to 200. That's not a terribly bad move. And see, when it gets moving, it moves fast. So I kind of like the look of this. If in fact it comes out with good news, which has last couple of times, and if it gaps up on the news. See, this one gapped up and took off. Great. Yeah. This one gapped way up here and came way back down, right? So you'd have to really, if you held your stop loss underneath this one, then you'd have been fine, just barely, but you'd have been fine. And then you get the big run up. See, I think this scenario is a lot more likely to happen than this scenario. So after earnings, let it jump wherever it's going to jump, if in fact it is. If it drops down, okay, sit back and wait till it finds some support, and then you have it. But we're trending higher on this thing. I think there's a good chance this thing does whatever it does, comes back and challenges its highs at 180. If it surpasses those, it's at 200. And I mean, that could be a really good move. So I would keep an eye on this one. In fact, where's a watch list I can add this to? Whoops. Yeah, I think I'll put it here in my growth watch list. And we'll revisit that. We'll revisit that at some point. Okay, index list. Oh, sorry, FX pairs. So Aussie yen. Let's look at that here right before the market opens. Where's the Aussie yen? Why is that not in my list? Are you serious? I don't have that. There it is. So it's looking like it's down from yesterday, from over the weekend. No. Anyway, let's give it the 15-minute chart and see it's over the weekend data. So Aussie yen seems to have been caught in that downward move. This is that whole oil thing. But unlike the NASDAQ, where it came up and you know, it came back a little, went down a little, came back up. So it's kind of hanging in there. It's not giving it up, but it's not so it looks like we got some reports coming out there. It's not charging up new into this area, which would be equivalent of what the NASDAQ was doing. And we're 2 or 3 minutes away, so I want to look at the index list. Bitcoin's still up 5%, Ethereum's up 4%. The real-time futures. Huh. Not seeing them here. I guess we gotta go look at the NASDAQ. All right. So we saw the NASDAQ had come up. This is the 15-minute chart, so it's got fewer, but it's still kind of hanging in there. Still kind of holding. And where did we close? We closed here. No. 6. 3 o'clock. Right in here. So we closed right here. And so we're still up just barely from that. Yeah, that is 0.07. So I don't know. I think this is still people acting like they want to be buyers. But there's some obvious, you know, back and forth. So I think that the idea that we had left with of putting on DKNG, yeah, DraftKings, just a little bit lower at 55, at 53.50 as opposed to 53.70. I think that's a reasonably good strategy. So we're going to go over here, DKNG, and this will be a little bit delayed, but we should be able to see how our strategy played out. Oh, whoops, it's daily. I wanted a 1 minute chart. 1 day, 1 hour, 1 minute. There we go. All right. And there it is. Look at that. It opened and just dropped straight down. So we absolutely would have got filled at did I put that in at 53.50? Yeah, so it was way up here. It came all the way down. So it easily would have gotten filled. Let's make sure that that did. Yeah. And so DraftKings positions. Okay. So it's losing a bunch right out of the gate. I mean, yeah, because it's going down. It's all right. We have the stop loss set at 50. So it's way down there. Lots of room for it. And as you can see, it's jumping up and down. So I had made that idea because I thought that the markets could be bullish and I didn't want to miss out if it just took off and went up. Yeah, it came down. That being said, the entry was 52.38. So even though I put the limit at 53.50, the fact that it opened that much lower, I didn't get hurt. Now, it's also the case that because I got in at 52.38, then my stop loss is now not 350, it's $2.38 lower, which means I can set my take profit at a much closer position than that. So I'm going to do that. So I'm like $2.38 lower. Yeah, I think I'll actually even lower the stop a little bit. So we'll modify that to be $3 lower on this side and $1.50 on that side. Okay. Okay. So those are, tighter ranges than I originally started with. Oh, and you seem to have a really good time trading your stocks. Can you please start doing some currencies too? Oh, well, I mean, that's not a bad idea. There are a lot of other places on Actions to Wealth, a lot of other guys that trade currencies. But sure, I can bring currency ideas. My my specialty is bringing stock ideas, but I think I can. I think I could do that. I think I can bring in an idea with a currency trade just as a kind of a bonus opportunity. So I'll bring that in. Currency markets have really been flat, but if we know that, if we take the expectation, I'm going to get in, make that, jump, and just try to grab a quick jump, then the great thing about a currency market that's going sideways is that you get these little trade opportunities all the time. And so, thanks for the suggestion, Helen. I'll try and incorporate some of that next week. Meanwhile, on DraftKings, we've rebounded all of that, and we're well, even as I say it, the shop's down. We'll see. It's like there are still buyers here, and are there still buyers in the market? Yeah, we're kind of holding just barely above break even, and on the Nasdaq. S&P's down, but just barely. So it's really a quiet start. But the big thing is it hasn't crashed. It hasn't just sold off. So I really believe that means people want to be buyers still. They're looking for excuses to buy. And so I think it's a good week to try and figure out how to be a buyer on careful opportunities by dips and so forth. Until next time, everyone, take care and trade well.